Hi, welcome to today's edition of Market Analysis. Today is the 26th of October. I'm Giovanni Betancourt, trader, analyst, and educator with Vantage Markets. Well, let me take you down memory lane or history lane, better said. In 1971, the former U.S. Treasury Secretary John Connally, he was in office from 1971 to 1972, he gave a speech to the other G10 finance ministers in Rome. He said, "The dollar is our currency, but it's your problem." What followed in short order was the rapid devaluation of the US dollar and the end of the Bretton Woods, formerly recited by the Jamaica Accords in 1976. Now, we are seeing the US dollar index retrace from its all-time high of 150-ish down to when I wrote this at 110.20. Now, I'm placing a support of 109. This will be a breaking point for the US dollar index and the markets. Now, the markets, they've been trending higher now for a third straight trading day, but will today be the same? Stocks rose strongly through the session without a discernible catalyst for the gains. Investors positioning mean reversion, key technical levels, and a low bar for earnings season likely have all contributed to the broad rally we saw yesterday. Yesterday, the S&P 500 rose 1.6% as all 11 sectors closed in the green and 450 of the index stocks rose. The Dow Jones Industrial Average added 1.1%, and the Nasdaq topped 2.3%. Now, bond yield's relentless march higher of late took a pause, helping growth stocks in particular. Now, seasonality is on investor side these days as well. The November through April period is historically the much better half of the year for the market. Since 1961, that stretch has brought an almost 3,000% inflation adjusted cumulative return over the S&P 500. The May through October return over the past 6 decades is only a cumulative of 14%. A larger rally might even be possible in the next couple of months around the end of the year. Now, that kind of a bump is what Wall Street considers a Santa rally. Now, gains that come from folks funding their retirement accounts for 95 years, the S&P 500 average move in the fourth quarter is a 2.7% gain. Now, this is according to the Dow Jones market data. But there is a caveat, and it goes back to the economic outlook. Positive signs should get things rolling. A more hawkish Fed or even hints of a slump, though, could push the kibosh on seasonality this year. The market tends to reflect a recession a few months ahead of when it actually lands. In 2008, for example, the S&P 500 dropped 23% in the fourth quarter. In fairness, the financial crisis was just that, a crisis. The talk of a recession next year is for a mild one, per se. Now, let's take a look at what the markets are entitled for us today. We are seeing that today the Nasdaq has opened on a gap down, which it has already been closed. So it's meaning that most likely we are going to open down in the U.S. session. The market has made a triple bottom lately with those three higher movements, but obviously, right now we're creating that triple bottom. So, will this triple bottom hold? Will the market come back down again to retest it today? That's where our focus and our attention should be faced on. Okay, most likely the market is going to open to the downside and it will be tested. So let's see if those are opportunities for buyers down here, or will they have change sides and then just let the market take its course and drive it lower. The S&P 500 has made a double bottom from yesterday to today. And the same scenario goes, we opened up with a gap down in the UK session, European session, and it has already been closed. Let's take a look at crude oil. Crude oil, in fairness, with crude oil, is the volatility of it, or the fluctuation of it, is really a tight range, channel. $84 and $86, really. Let's see if today's session we'll see a pop to the upside. The 52-week moving average is closing in on the market. Anyhow, I have set my resistance as for the 19th of October high. So let's see if we continue to this push higher, will we reach this $87 mark, round figure. That's the consensus. As far as Nat Gas goes, it is looking to trend lower. Will we make another attempt at $5? The RSI is almost in oversold territory. Perhaps the pivot will give us a chance to come and take some positions on the long side if we find support on the pivot. And then we have gold. Gold is trading, right around the 1650 mark. 1670, it retraced from it. RSI is neutral. We will take another attempt at yesterday's high. The consensus or the scenario seems fair to say yes. So now we're looking at copper. Copper is looking to come up above the 350 mark. The 52-week moving average is closing in on that level. Anyhow, RSI is still not in overbought territory, so we could probably see copper coming up to test the 350 level, and then if we do trade above the moving average, then we're gonna come and see if we can take out the October 5th high. Then we have Bitcoin. Bitcoin, obviously, it helped. Yesterday was just really narrow trading, and it has popped up. NASA helped, obviously, Bitcoin to move higher. Let's see if it'll stay there or if it will just start trading, doing consolidation, do some ranging around the pivot value. Then we have the euro, which has finally come back up to parity, but will it hold? It's trading above the 52-week moving average. And let's see, the RSI is still not in oversold, overbought territory, so we could probably see that if the dollar index obviously continue to trade lower. And then we have the pound is trading above a pivot, is trading above the 52-week moving average, so that will give it some support. I have my resistance of yesterday's high, so that will be tested out. Let's take a look at the Japanese yen. It took a plunge, really, even beyond 150, 152. Is in the range right now. Will it continue to move lower? If we do come test the low of the October 20th, then, and if we break it, I am looking at 144, 145-ish around it as my support, just because it is a previous consolidation stage. Now here we have the dollar, Canadian dollar, and let's see if the dollar will appreciate some more and then come back and test the slow. 135 is the psychological level. The moving average, the 52-week moving average is pointing to 134-ish. And the dollar index, here it is. I have that 109 mark, as I mentioned. The 52-week moving average is acting as support. So let's see, that will be the dynamic support level for it to see if it'll be broken and then come down to 109. And that's it for me today. Thank you for watching and have a fantastic day.